Welcome everybody to a special daily plan here. I'm your boss, Joe Boss, and we'll be looking at some month ahead expectations here on a few assets with these indicators. So let's get right on into it. We'll start with the DXY, go through the USD major pairs. We have some movement on the yens recently. We'll go check out equities, commodities, and then crypto. So let's get this show started with the DXY. We had pretty good expectations week by week, just as a review of what's happened so far on the DXY. We really ramped up, almost hit that expectation up there. It looks like we're going to close in proximity of where we expected this week to close. And outside of, I'd say, these expectations here, this was pretty bang on. Yeah, I'd say it was pretty bang on trading this week by week for the last 1, 2, 3, 4 weeks. So we did pretty all right there. Let's see if we can do it again for this next upcoming month. So I'm going to start off with the closing odds here. And these percentages here just tell you what's the probability of getting a close between any two of these pivot points for the month of March. Note how these percentages here for February are different than these percentages here for March, and we have 34 samples. This is seasonal data, so 1 year is one data point. And so we have our seasonal data here. You can see a lot of closes for the month of March are between this R1, call it 105, and 104 spot here, central pivot. This whole area here is where I would nominally expect a close for the month, and nominally is simply where I'm expecting the highest probability given the face value odds here. Then we have this little PWP right here. That stands for probability weighted pivot. That's when you take all these values and all these pivot point levels and you weigh the pivot point levels by the probabilities. And this kind of works like the mean of your whole little distribution here. So you can see when I'm hovering and saying, oh, this area is the area I'm interested in, notice how this is kind of the quote-unquote midpoint of that. So we can start this off with an arrow that goes something like that. And we'll color this blue because our distribution here is blue for our closes. And we'll start off with something like this, and I'll be adjusting this as we go on. Now I'm going to adjust the data here, so that then it uses low data. And then the indicator updates and changes color. And now instead of giving us the probability of where a close is likely to be seasonally for the month of March on DXY, this is telling us where the low is likely to be for the month of March on the DXY. It doesn't give us a timing. It just says, hey, somewhere in these prices, these are odds of finding your low in these prices. And looking at this at face value, this says, hey, 40%, a little bit more than 40% of your lows for the month are in this 100-point range between 104.5 and 103.5, this whole spot right here. And then the odds dip a bit, and then they start to increase again. And you get another, another, I'd say 200-point range, 103. No, it's 100-point because that's 101.9. So it's another 100-point range, a little bit more than that here. So there's two distinct spots that I'd be looking at for a low. And I would actually call this and this two different regimes. Finding your low for the month in here would be more bullish. So if you have bullish expectations, this is what I'd be expecting. And then this down here would be bearish. So if we were thinking that the DXY was going to go lower on the month, this is where I'd expect the low to come in. That would actually be pretty nice. That'd be like a 200-point move lower. That'd be quite risk on, frankly. All right, now let's go ahead and look at our highs that we've identified. That I'm not so sure if I need to be skewed bullish or skewed bearish quite yet. And considering the information that I know about the upcoming economic events, I am short-term bullish dollar, then going into the middle of the month more bearish. Wow, you can see close to 30% of highs are right here between 105 and 105.5. So yeah, you don't always get your high in this area. This is actually still a considerable probability of getting your high somewhere here between 105, right? And then once you get to the edge here, you can see your odds start to look very thin and very low. Yeah, so past 106, it starts to become like a guess where your high is going to come in. So there's a bit of a skew to the upside. Crossing 105 seems like a risk or touching 105 seems like a risk. Based off my interpretation here for the DXY over the next month. So I'm just going to add another line here, color that one green, and we'll timestamp these in just a sec. Then I'm going to do one more thing. I'm actually going to pull up this little doodad. Let's see here. So positive-ish expected value up until the 7th, and then it starts getting negative and a bit choppy, starting kind of from the 8th to the 14th. So here's the 8th to the 14th. So if we were going to get our bearish move, I'd probably would want to expect it somewhere around there. Yeah. So maybe something along these lines here, and that is quite range bound now that I think about it. And let's pull up our low odds here. Yeah, that could make decent sense. That could make decent sense. Now let's go ahead and use some non-seasonal information here. Yeah, you got kind of a gap there. Pretty significant gap. Okay. I'm just thinking relative to also the Australian and the New Zealand. There's a few things I'm thinking about taking into account here when it comes down to US dollar significant weakness, because there are some risk-on risks, some US dollar weakness risks. And that's mostly from other central banks holding their policy where they're at right now for longer than the Fed. I have a feeling that will probably rise a bit into the next CPI, just a bit, and then hopefully that CPI comes in below 3% definitively, and then we start the move lower, and then that goes into FOMC and ECB, right? And then that goes lower and lower and lower from there. So I might not be so bullish on these expectations here. Let me go ahead and flip these back to the high data. Yeah, I'll just set it to 105 and call it there. I think that's a reasonable expectation at the current point in time. Go ahead and timestamp these. And let's do one more thing. Let's check out our closing distribution. Yeah, a lot of your closes here. And then you can actually see down here, you have a bump in the distribution. So you have a bunch of your closes here, and then some closes here. So this would be your more neutral, positive drifting US dollar. And down here would be your risk on. Yeah. Wow, the low probably would be down there in that situation. Let's go ahead and look at our seasonality real quick for next month. Yeah, it'd be... Yeah, I don't know about that. Not so sure we'll go all the way down here unless that CPI really surprises to the downside and the Fed is especially dovish for some odd reason. But yeah, I'll go ahead and adjust this just a tad. So yeah, just something like this. This would be my net expectation going into the month ahead. All right. Now the asset most similar to the DXY. And like I said, we're going to be covering USD pairs and equities, commodities, and then some crypto. I just want to pull up euro dollar here real quick. Well, it doesn't look like we're going to hit our price expectation, but it looks like our timing was right and our direction was right. So this kind of came in under magnitude. But we closed where we expected to close the week. So, you know, if this candle didn't have a big bottom wick, then this candle would have been down here, but then we would have missed our closing expectation. So, you know, not everything is exactly perfect when you set expectations. Nothing should be, frankly. And this chart has now updated, so then this is technically the first trading day of March on this chart now. It's not going to change our interpretations at all, quite frankly. So real quick. So this is the March data, and you can see we already have April's data over here. If I expand that, these would be the lows for April. But for now, let's just focus here on March. So we have a lot of lows down here, like 50% of lows over the last 21 years are somewhere in this 100 pip range, 1075 and 1065. Let's check out our high odds. Wow. Decent amount of tops for the month come in essentially right off the bat or up here. And that looks quite similar to the DXY view, where either your low for the month comes off right off the bat or you go significantly lower. So maybe there's a bit less growth here. And you can see some closes here, a lot of closes here and here, kind of dispersed in high density. Okay. Let's pull this up here. So pretty flat expectations up until the 8th trading day. Right there. And then we take that to the 14th trading day, set that in green. That's the net seasonal expectation. Let's go ahead and pull up our distributions here real quick and adjust these. And real quick, pull up those low odds one more time. Yeah, either the bottom of this peak or the top of this peak is what I'd be more or less looking at. And given the amount of time that we have until the CPI comes out, I'm going to go with this setup here. Okay. And now I want the closing odds. Well, I should probably do the highs real quick. Yeah, so maybe the high comes up to around here. Real quick, just make sure it lines up still. Yep. And then take that into a nominal close. Okay. Timestamp all these guys. And real quick, check out our closing odds here. Yeah, so maybe the close ends up a bit higher or down here. If we go ahead and look at the distribution, you can see this peak, and our distribution kind of covers both these scenarios here. I'd be willing to say the volatility, tapers out a bit. And this is just based off the expectations that I'm looking at here into the end of the month, based off the information that I just have available here with these indicators. Now, I do want to also check out the expectations for next week and see if they line up with this in any particular fashion here. So next week is actually quite considerably bullish. You don't get too bearish next week, it looks. Well, quite a decent amount of lows go lower than the low we had this last week. How about our highs? Are they particularly high up? Yes, they are. You have quite a decent number of highs past the prior week's high here, but also something maybe even along these lines is not out of the question. I'm actually going to put that in. We'll be doing week ahead expectations in tomorrow's stream on Friday. For now, I'm going to focus on doing the month ahead trade plans. And then tomorrow we'll do week ahead trade plans. And then on Saturday, for anyone who's in the trading group and has access to these indicators, we'll be doing an outlooks review. And then potentially revise our trade plans when we do that outlooks review on Saturday. Same time. All right, let's go ahead and check out the Aussie dollar here. Yeah, Aussie, a lot of highs for the Aussie. Call it in the mid to upper 105, 65 handle. So just get some placement drawings down, some temporary ones. Wow, a lot of lows around there. Seems like either the low comes in something along these lines here. All right. And then heading higher from there, but let's do one more thing. Let's pull up the seasonal forecast here. Well, that's quite decent. It's quite choppy still, so it's a bit bullish next couple of days, and then the next few days after that are a bit bearish. So it's quite choppy, but once you get towards the end of the month, it seems to be slightly better, but those are very flat expected values here. So this can get quite choppy. And then whatever the drift is going into the end of the month is kind of the end result there. So with that in mind, I wouldn't be, I mean, I'd say it's essentially a coin flip, up or down, down or up. This really would be one that would have to be taken week by week. Because there's also a lot of news around China and commodities and how China is ramping down their oil intake and ramping down their copper intake and ramping down a whole assortment of commodities intake. Just not that great. It'll probably impact Europe quite a bit, but Australia, they do a lot of business selling coal and iron ore to China. And they just apparently they just haven't needed it as much net. So yeah, this is a bit tricky. RBA is probably going to want to try and stay on hold also. However, their economic growth is also quite bad right now. New Zealand's in a sort of similar position. Yeah, I would just maintain the initial downward expectation here. I don't know if it'll go this far down. But given the information we have, let's go ahead and set a nominal expectation here. And that would be the 7th. Yep, the 7th. Oh, didn't mean to grab that. Push this over. Let's find the 7th. Oh, look, it's right where I wanted to put it. And then take this out to call it the 13th. And then a drift into a close from there probably, or into a slightly higher high. That would be my nominal expectation for Australia. Ooh, yeah, maybe a bit lower than, huh? But you can also see risks of closing higher. See, this is your positive drift close. This would be your negative drift close. I'm not so certain about the negative drift close, so I'm going to go with the positive drift close. We can always update these expectations in the future. It's important to set expectations going into the, so then as you get new information, as you read new outlooks, as you figure out what other market participants are thinking, you can say, oh, I need to update this expectation materially, either higher or lower, or change the timing. You need to start somewhere. And this is somewhere. From there, over time, you can set new expectations. That's why we timestamp these things. All right. New Zealand. We tried to take a shot on this one here. Didn't work out. I thought there'd be the bounce into the close, but that's just how it goes. Missed the upside expectation there. We did hit this expectation for the month, just barely. So it was kind of a mixed scenario. We got the general direction of the larger moves. This was particularly cool to see. But that was a miss, and that was a miss. And these little spots here changed the whole performance of trading this thing. So even when you do set good expectations, this is where good risk management comes in, where you have to figure out, did this move here kill my expectation of seeing this move for the rest of the month? Yeah, you kind of have 3 spots here to look at on a closing basis. Closing up here, those are your particularly bullish closes on New Zealand. Closing here, which are your more neutral, range-bound closes. And then here, which are your more bearish closes. So with that in mind, let's check out our highs first. Wow, it's sort of flat. Yeah, that doesn't look all too attractive, but if I was going to set some upside expectation, I'd say 62 this month. Or in a really good scenario, 63 this month. In a really good scenario, 63. So we'll have to see. Again, if the Fed reiterates, we could do June, and then the ECB says, we could do June, and then inflation in New Zealand materially comes lower, and growth, an accelerated growth rebound somehow occurs in the macroeconomic data in New Zealand, 63 would be in the cards, but that seems like a pretty far shot. So let's check out our lows here. A lot of lows come on right off the bat. You can see a lot of lows around here. So I have a bit more certainty about setting my low expectation for the month around here. Let's do one more thing. Let's check out our seasonal forecast. Oh, wow. That first line lines up quite well with the seasonal expectation, huh? So let's set this out to the 6th and line that up with our distribution and our lows right around there. You can see how the candle forecasts line up quite well on that. And then from there up to the 14th, set that to green for the bullish move. Let's hide those tools. A lot of tools in use here. Set our high. Now let's figure out, well, I would say this would not be out of the question in this sort of scenario, because that would be quite a nice low. Yeah, I'd say New Zealand's probably got a good shot of 200 pips or 150 pips for the month. Decent shot based on this interpretation, based on these stats and how I'm interpreting them. Oh man, and then quite a pullback here. Yeah, into the close, something like that. A lot of these dollar assets we've looked at, Australia and Euro, they all have this pullback into the close. But again, you have this probability here of getting more positive drift into the close. And it's not totally out of the question that you get that. But I'll just go for the nominal expectation. which would be something along these lines here. So yeah, that's what I'm expecting for New Zealand over the next month. Dollar CAD. Man, this thing just keeps getting worse and worse. Canada just keeps surprising to the downside, right? Yeah, nutty. All right. Let's go ahead and check this thing out for the month. Wow, a lot of... It seems like most closes are down here for the month. But if you look at the distribution, it seems most closes are up here. So this is non-seasonal data. So if I drew something like this, that would be the net expectation. And then using the seasonality, you do have this odd here, but you also have all of these odds down here. So let's go ahead, look at our high odds. Keep that in touch. Wow, quite a decent amount of pop there. Yeah. Not out of the question of hitting that. A lot of lows around this spot here. Let's go ahead and check out our low odds. Wow. These low odds are a bit more peaked this month around this spot here than they are generally in the distribution. Yeah. What to do? What to do? Well, let's think about it for a second. This is probably where we can go ahead and pull up the seasonal forecasts. Oh, that makes the decision a lot easier to make. All right, up and then down for the rest of the month. So maybe up a bit more significantly to like the high 136 handle, tapping 137. Yeah, like the high spot here on this part of the distribution, maybe. And real quick, I do want to check out our yield spreads. Yield spreads are still quite positive, but they're only positive due to this long-term lag here. And by the time we get over here, this particular factor might actually be a bit weaker. And then we'll have to see how these shorter term spreads are once we get about 6 trading days into the month. And I should probably say that these things here are yield spreads. So if you take the difference between the 1-year yield in the United States against the 1-year yield in Canada, that gives you the spread between the 1-year yields for US and Canada. And if you do that for all of the available yield durations that you have, you can make something that looks like this. And yield spreads have been a known leading indicator of FX prices for about 30 some odd years. I'll go ahead and just say that they're definitely not perfect. However, every other outlook that I read from a major institution uses them as a relative benchmark in their FX forecasts as a factor. So I consider them important to look at. That's why I made the indicator. So let's go ahead and continue on here. Let's go ahead and color this one green. And then, what was it? Down for the rest of the month? Was it? Yeah, pretty down, choppy. Most of the down seems to come in from the 7th to just the 10th. So it's like this spot here is where most of the movement usually comes each year. And then the rest of that is drift. So it would be something like sharper move, lower, and then like from there, a drift into a close around here. And if we bring up these closing odds again, that does start to make sense, right? A lot of the closes down here. You can see these things actually have quite large spikes on the wicks. You can see the wicks over here at the beginning of the month, they look smaller than the wicks over here once you get towards the end of the month. So there's a lot more variation in your highs and lows once you get into the end of the month here. So volatility starts ticking up here. That's quite an interesting expectation to draw. I haven't drawn something quite like this before. But I think I'll end up going with it because that's just my baseline the rest of the month. And as new information comes out, I can always draw a new line with a new timestamp and just say, hey, set up a new expectation for the month. And we'll go from there. Okay. Let's go ahead and check out, I think it's dollar yen. Check out the dollar yen. Wow. Probably is, I'm just straight up bullish on the yen, so I'm just gonna right off the bat set expectation down here. And what about a low? Well, most of the lows are also around this spot. Yeah, so that might be too conservative of a close then. Let's go ahead and pull up our seasonal forecasts. So up, then down, and then sideways. So it goes up into the 7th trading day here. Net, and then from there down into the 13th. Probably a bit more aggressively. Update this to red. And then there is some bullish expectations towards the end. So maybe this is a more neutral bullish thing that occurs. Yeah, something along these lines, some positive drift. Go ahead and set this to closing odds. Quick little overlap here. Yeah, so maybe something along these lines here. We'll have to see because yen is real strong. I mean, if you look at Aussie yen, we set a bearish expectation there, and that lined up. If you look at euro yen, that thing just fell off a cliff yesterday. If you look at pound yen, New Zealand yen, man, I even set a positive expectation there. That was not bad at all. This thing just got hit. You can see a lot of closes are essentially sideways here, but then you have some skew up and some skew down. And well, the skew down, the exogenous risk on that is a bit more likely to realize itself as the BOJ adjusts its policy now. Let's go ahead, do this. So usually it's down to the 8th. Up till from the 9th I mean, that's essentially sideways, but call it up to the 16th. And then probably sideways or down into a close. So we're going to call that blue, green. So now that we got that, let's adjust these based on our expectations. Start off with low. I'm a bit more bearish on the Great British Pound here. Let's actually look at this thing on the week. Yeah, that is quite bad. Okay, something along those lines. Now let's look at our highs, probably up to around here. That would be quite a conservative high. That would not be good, but again, a pound is not in the best of conditions. The UK is not in the best of situations economically. All right. Oh, and that does line up with our seasonal closing odds, I believe. Oh, check that out. You got patch closes up here and a patch closes down there. That is one freaking bimodal distribution if I've ever seen one. That is nutty. So yeah, something along these lines. Let's go ahead and timestamp these. Again, when we look at these things week by week, we'll be setting up individual weekly expectations as well. And tomorrow's stream is going to be a week ahead expectation. So we'll have a week ahead trade plan, and I'll be doing these arrow drawings for next week. We're doing the one just for the month here. I think I've covered the ones I'm set up on. Yeah. Okay, let's go ahead and do ES. You can see this is like a mess. Yeah, I was expecting a lot more volatility. Anyways, let's go ahead and check out our probabilities here for the month. So net, let's call it 52 just to start on the closes. Check out our seasonal forecast here. Well, there's usually a pull back into the close, so maybe we end up with an overshoot. That's not that bearish. That's not that crazy bearish expected value wise. You tend to see more of a hiccup between the 4th and 10th. 4th, 10th, yeah. So I'd say the hiccup kind of starts around the 16th, and then that can kind of take you into the close there. Yeah. Okay. And we got from the 7th to the 15th up, and then we'll have to figure out what the likely low is going to be from there. Let's check out our low odds here. Ooh, a lot of lows down there. Close to 20% of lows are above the central pivot, so decent, somewhat continuation odds. A lot of highs around here. Yeah. A lot of lows coming right off the bat on the month. Will we get it again? Well, I'm willing to just say that the positive drift continues for sure. Not going to be a bear here on the ES. I'm not totally sure of what the pullback would be like. So I'll go ahead and just set a high expectation of around here and a closing expectation like that for now. Not so certain to make an expectation of where the low is going to be for the month ahead, so I'll just set these up like so. Just a net bullish expectation. Go ahead, leave it at that. Let's go ahead and check out the NQ. Now this thing's kind of split, either closing up here or closing down here. Well, I'll go ahead and set the more bullish expectation there. Set that to blue. Check out our distribution here. A lot of closes up there. Fair amount of closes here. So I think somewhere actually a bit even more aggressive. 18.6, that's 600 point move in another month. That'd be quite aggressive. But, you know, if the S&P is doing well and things continue to recover, it's all well and good. But that means the high could be like way up there. That is nutty. Yeah, I'm not too sure you're going to see 1900 next month. That's 1,000 point move. Unless there's some crazy earnings that people are expecting to get. Now let's adjust these closing expectations then. Let's go a bit more net sideways then. All right. Go ahead and check out our low odds real quick. A lot of lows again coming right off the bat, so something along these lines here. And let's check out the seasonal expectations here. Yeah, it gets choppy at the beginning of the month, then it sort of smooths out towards the end. So something like this. Let's see here. That's the 15th. Yep, that's what I want. And then from here, from the 7th. Yeah, so maybe there's a bit of a down move here at the beginning of the month. Maybe down here to 77. Nah, it's going to be a bit more conservative than that. Yeah, something maybe even like that. Okay. I'm cool with this expectation here. That seems like the nominal setup to me based off this. We'll go ahead and update them as we go along the month. On to commodities. We'll start with crude. Well, crude hit the low and exceeded our high expectation. We met our closing expectation over here. We kind of missed our expectations around here. Let's see. We saw risks of overshooting here, but it doesn't seem like oil is holding up terribly well. Nice bullish expectations here at the beginning of the month from here to the 5th, and then it's quite negative expected value from there to the 11th, and then bullish drift into the end of the month. So that would be the closing. That would be bullish. All right. Let's go ahead and check out this here. So that might be closer to down there. Yeah. And let's check out our closing odds here. That might be something along these lines. And now our high odds, yeah. Yeah, essentially range bound for oil in a $4 range between 76 and 80 based off odds that I'm seeing here. Unless something new comes along that makes oil particularly great. I know the seasonality for copper ain't so hot during the first week. I was just watching a Season X video on that. Let's check gold. Yeah, we missed a lot of these expectations here on gold. But towards the end of the month, we kind of picked up our pace. Let's see if we can do better here in the next month. So a lot of lows for gold. Well, a lot of closes for gold are a bit lower for this particular month. Again, just looking at the highest probability, going with the nominal expectation. This does line up with our nominal expectation there. So the seasonality and the non-seasonal data line up. Okay. So let me take a shot at guessing that it's similar to oil. All right. Turn on the seasonal forecast. No, it's quite different. Bearish off the top, choppy in the middle, and a bit bullish towards the end. Okay. Let's check out our low odds. Wow, a lot of lows are quite a bit lower there. All right. And the highs. Probably a tad higher. It'd probably be up to here. That'd be quite a volatile swing here for the monthly expectations. Those are quite, it's quite a, huh. That'd be quite a swing for the month if gold actually forms like, wow. Well, we'll certainly be following up on this expectation as we go out through the month. And now Bitcoin. Let's see. Yeah, crazy move here. What's our chances of going to 100,000 next month? It's not totally out of the cards, but 70K also isn't either. 70K is actually in the realm of possibility next month for sure. How about lows? Yeah, well, close to 60% of the time, the low for the month is somewhere in this range here. So we can set that sort of expectation. But again, when Bitcoin starts doing parabolic stuff, when you only have 14 years of seasonal data, it's not going to be all that useful. I'll go ahead and just set the nominal expectation then, based on the distribution. Call it 68. Set that one to green. Go ahead, look at our closes. And then something like that. For blue. And again, as we get new information, maybe new information about the Ethereum ETF, or maybe a few $1 billion more in inflows to the Bitcoin ETFs. Send this thing closing at 80K. And not out of the question. All right, let's check out Ethereum. Looks like Ethereum still beat our expectations for a close for the month, just at the edge of this distribution, just at the edge of this peak in the distribution we identified. And we don't need these drawings anymore, so I'll delete those. I'm just going to keep the arrows, not those things. I don't think ETH is going to double. But I also don't think ETH is going to fall terribly here. So maybe the pullback's more like this. Set that to red. And the pull up is a new high. Green. If Bitcoin's making a new high, you're probably talking, 40K, right? But let's stay with the nominal expectation here and then go to a close. Something like that. Probably do it over a slightly longer period here. Put in our timestamps, and then up as we get through the month. I would do Litecoin. It just had a major snap up. I wonder, maybe someone started talking about a Litecoin ETF, right? That would, that would probably get Litecoin out of this trench here. Quite nutty. Huh. Somewhat decent expectation here. I've been doing these things for a while. I'm like, maybe it drifts up, but I'm just really expecting this thing to come down here. And yeah, nice to look at the history. Nice. All right. Well, I'm not going to do any month ahead stuff for individual equities. I did all the currencies, I did the commodities, and I did the crypto. So that is the month ahead trade plans. And tomorrow, we'll do the week ahead trade plans. And on Saturday, for everyone who's in the trading group, we'll have the outlook review and potentially revise these expectations. So, with that all said, I hope you guys enjoyed watching. Hope you maybe learned something. Say how, in the span of an hour, I did my trade plans on multiple different asset classes and then multiple assets in those asset classes for the whole month ahead. Discretionarily. For whatever that's worth. Alrighty, guys. Let's see how these trade plans hold up for the month ahead with an hour's worth of work. Okay, you guys. I'll see you same time tomorrow, 2 p.m. Pacific, 5 p.m. Eastern for the week ahead trade plans. And again, if you want to follow up with maybe doing some Outlooks research or whatever, hop in the Discord, come check it out. Alright, you guys. In a bit.